Let's bring in Larry Shover, the managing director at Exchange Capital Resources, to get his thoughts on this number. Larry, I'm taking a look here at the bonds. They're kind of limited, coming off a little bit, so rates are inching higher. Looks like the indices are kind of chopping up. This was a big number. It looks like investors don't really know what to do with this one yet.
Yeah, I don't think they do either. And part of that is that consensus was talking all week long that it was hard to get a consensus on BOS because of the seasonality, because of the weather issues. And of course, this is a great number and not so good for dollar bears, I would say. But I don't think people will take it as seriously as they would have if this number came out last month.
All right, Larry brings up a good point here in terms of market reaction too. This might be the biggest reaction I'm seeing here right now. If we could just pull up this chart here real quick, because this was a product that was on the move higher yesterday, Larry. The dollar's catching a bit of a bid here and starting to reflect that rate rise and the expectation again here that that's going to continue to play out here. It's interesting to see this dollar connected to rates on the move higher, and well, this fundamental read here that the economy is bettering and ultimately that the U.S. economy is a major focal point there. I do want to point out here, now that we have a visual here, Larry, real quick, and then I want to get your thoughts on this dollar to the upside. But here's the number, ladies and gentlemen. As mentioned, we were looking for, again, around 150,000. You can see it came in significantly higher than that, 379,000. As mentioned, Larry, also prior got revised higher. That's going to add to the bullish sentiment here associated with the economy bettering. And that participation rate, I heard, was a major focal point as well, Larry. It came in at 61.4%. But certainly this dollar up and through the 92 handle in reaction to this news here, they're adding the gains from yesterday, Larry.
Yeah, no, we should be, I think. This was a great number. However, let's also keep in mind that 10 million people are still out of work.
Yeah, good point.
And as that continues, as Europe continues to lag, as emerging market bond markets creak as they have been, you're going to see a conviction bounce in the dollar, and the short covering that's involved is astounding. I mean, it's really the only asset class I got right this year so far. I've been wrong with bonds, been wrong with equities, but I continue to be a dollar bull, so I'm thankful for that. But I think it's due to the fact that the unemployment picture is so far away from being clear to us. And it's one of those things where it's habituation, where the dollar is apathy, and then perhaps a correction somewhere. But right now, the bounce looks good, especially the fact that Europe continues to lag and emerging market bond conditions aren't all that great.
It sure is the case, Larry. I appreciate you reminding us of that. Real quick, I want to take a look at the chart here because I want to remind everybody of the fact that, well, if we do bounce here and we do get continuation in the bid, notice how this is at a key level in terms of the technicals as far as what we were talking about. I told you guys a couple weeks ago I'd be shocked if we spent a lot of time down here around this 90 even, 89 level. I thought we were either going to break hard quickly or rally off. I was surprised, Larry, to see us kind of chop for a couple weeks around this level. Maybe it was related to the jobs report waiting, a lot of Fed speak, Powell, and some of the anticipation or lack of movers as we waited for that. But I also wanted to take a look at this, Larry, with you in terms of what's been playing out here as far as the treasuries. And now we're starting to see some reaction to this number. Take a look here, ladies and gentlemen. You got the bonds on the left here, the longer dated selling off. We're talking, now we're taking out those February lows, Larry, and well, similar situation in the 10-year, which is interesting because everybody was getting so worked up about rates yesterday. And I was a little bit surprised because, well, even still, we have yet to take out those highs, it looks like. I guess, well, the TNX has, but certainly we're going to be watching rates here in the treasuries today as the market opens to see how they digest this information as well.
Yeah, it will be fascinating. And I do need to say that, next week's another issuance week, $38 billion in 10-year treasury. I think there's a $24 billion 30-year. So there's going to be a normal knee jerk for rates to try to climb higher, just due to that alone. But the thing we have to keep in mind with regards to everything is that the longer rates stay above 1.5, or whatever that number happens to be, the greater the urgency is going to be to incorporate that into forward projections in the household level, corporate level. Right now, it's not that big of a deal when you consider the fact that real yields are, they're 50 basis points higher than they were from February, but still the most negative that they've been since 2013. So we can definitely withstand this. It seems like a gigantic move, especially to me, but in the scheme of things, it really isn't. And so it's really the interplay that we have to deal with between rates budging higher and how that's going to affect stock market, equity valuation, et cetera.
You know, Larry brings up a good point here. On a relative basis, rates are still at historically low levels here. Let's just real quick take a look at the TNX here, going back to, well, the beginning, the turn of the century here. You're talking, again, we're talking 1998 on, and you can see the move lower, ladies and gentlemen. Larry, a good reminder in terms of next week. I'm glad you brought that up because we also have some central bank activity. The ECB, I think, kicks things off next week. The following week, we're talking the Fed. So certainly a lot of focus here ahead. I oftentimes say with a big number like this, with this jobs report, we sometimes get tunnel vision and lose sight of what's to come.
Yeah, it's going to be really fascinating because you have like Kuroda in Japan saying they're not willing to do anything at this point. And so that's really wrecking the yen versus the dollar. The ECB is continually trying to talk their currency down and really not doing that great of a job with it and really taking a page out of a playbook of the FOMC about applauding higher yields. So it's going to be a fascinating week. And I think really looking at the interplay between financial conditions, interest rates, and the stock market will be very telling on how to play this in the short term, because the market's getting used to a new paradigm right now, and there's still so many underlying issues that we all are very aware of, and it's going to be deeply fascinating to see how it all plays out.
Larry, your thoughts on gold with the dollar strengthening a bit here, rates to the upside? We've seen it dip down below the 1,700 level. Is this just the beginning, or do you see this as a buying opportunity in terms of what we're seeing as far as gold futures?
Yeah, I've never been really hot on gold, at least over the last 6 months, and I've had egg on my face about that for a while until very recently, and I just wouldn't really touch it at this point. I would wait to see some panic selling, which we really have not seen, and buy it more on a speculative, like taking the other side of weak hands, just selling it. And so far, the flows haven't showed that. In fact, it seems like people have been increasing their holdings, at least on the professional side. So I would need to see gold about $50 lower without being a technician to start, buying at that level.
You know, while we've got your thoughts here on the commodities or gold specifically, I wanted to just kind of extend that a little bit. We talked about the energies at the top of the show, but in terms of gold, coming off, while we're talking metals, how about copper? I mean, when you look at this jobs report, when you hear about this stimulus package now making its way through the Senate, headed back to the House, it looks like it's going to go through here at this point. Potential for infrastructure spending to come. Again, a labor market that's improving here, Larry, at a faster pace than we thought, at least this month, or last month, I should say. I mean, in theory, this could support some of the trends we've been seeing in commodities, energies, but also copper in terms of what's been playing out there.
Yeah, when you look at copper, zinc, iron ore, all of them multi-year highs and the momentum continues to go up. With copper in particular, you have to keep in mind that the story is really a supply deficit, and that deficit is in China. On the other hand, I've heard that story so many times. I've gotten duped by it so many times because there exist physical warehouses that hold a lot of copper that aren't really good or transparent at telling us how much is being held. I mean, guesstimates. So that said, just when you think that the momentum is going to continue, it could run out of steam. Although the fundamentals haven't changed, it's just that all of a sudden the bonded warehouse is released. But supply deficit's been the story. China is penciling in 6% growth for next year. That said, it makes sense for copper to be where it is, but for it to climb higher would really require some other fundamental story that I don't see in the works.
Larry, certainly something to keep an eye on here. It also speaks to the complexities in terms of some of the commodity markets. We oftentimes talk about that as far as crude products, but definitely in terms of natural gas. But a good point there in terms of copper and some of the other metals, some of the fundamentals at play there are not always what seems to be on the surface. You got to scratch a little bit below it. And that's what we wanted to do and we're able to accomplish with you, Larry, in terms of taking a look at this number, market reaction to scratching below just the surface. Ladies and gentlemen, Larry Shover, appreciate you joining us this morning. Larry's the Managing Director of Exchange Capital Resources.